Hi, welcome to the Market Alert for Friday, 20th September 2019. So the stocks moved higher, then they sold off. Today we've got the quad witching, which is the expiration of the options on futures, options on stock contracts and stock indices, and also the futures on the indices. However, as we can see here, also the liquidity crisis still continues, but the markets managed to stay on the highs. So let's have a look in a bit more detail. Start off with the Dow, and here you can see prices being moved strongly to the upside after breaking the 200 bar moving average, which you can see there. Also notice that prices do a 76% retracement from here. There's a lot of them actually in yesterday, where the market started trading down to here, and then from here to here the market sat on this one as well, and then when we started to reverse, you'll see prices also 76% retracement here as well. So there was a lot of pulling back yesterday before eventually the market put in a sell signal and moved lower. Then the 50 bar moving average became resistance, and prices then made their way all the way back to where they started before the session started, down at this level here, down at the DP, which drag across there, and you'll see it made the way all the way back to where the move started in the pre-market session. Daily chart shows prices are sideways, sitting at the 76% retracement. The all-time high remains here, but this market's really struggling to move higher at the moment, and unless there's something major that's announced to get prices moving to the upside, then it could be interesting to see if the market doesn't have some sort of a fit to move prices lower to get the Fed to actually react. News today, well, there isn't any, but you will see a lot more Fed members being wheeled out in the next few weeks to keep the market higher, encouraging them that they are going to inject some more financial methadone into this marketplace. Meanwhile, in the pound, starting off with the daily chart, prices have moved higher on the overnight. The market seems to be working its way back up towards the 200 bar moving average, waiting for the Supreme Court's decision on the lawfulness of Johnson's decision to prorogue Parliament. We'll just have to wait and see. But at the moment, you can see there that the pound moving strongly higher on the overnight. Well, I say strongly, it's up around 30 pips at the moment, but up also after the market closed in the main session that we watched yesterday. This is around 6 p.m. there, where prices continue to move higher. But during the main event yesterday, we saw prices moving to the upside, closing above the 200 bar moving average, but failing to take out the psychological level here. Sell signal coming in, the market then going back through the 200 bar moving average, back down to the low of Wednesday, before prices found some support, made its way back to the 200 bar moving average, traded in a range as the range became narrower, and then eventually the market exploding back to the upside there, having managed to get back above the 200 bar moving average. It's like a magnet. It's really uncanny how this market flirts with this level. Meanwhile, in Bitcoin, prices lower in the early hours of yesterday morning, managing to trade sideways and then move higher. But we're stuck in a sideways range, which you can see there in the daily chart. In the 4-hour, we are just coming back below the 200 bar moving average. So again, this proving to be a bit of an issue at the moment for this market. It keeps wanting to come back and go lower. And in the 15-minute chart yesterday, you can see prices were trading to the upside and in a range following the drop the night before. Got all of the signals there for the upside. The market breaks out, it trades to the 200 bar moving average, then trades sideways, then breaks through and has a blast back So the market regaining what it lost in the early hours of the Thursday morning session there. Going forward, watch for the market to trade back down to the DP level, 200 bar moving average, find support here with a bit of luck, and then bring it back in the 4-hour chart as well, which you see there. But the market's consolidating nicely. We're getting ready to look for a move towards the upside there. Meanwhile, in the implied volatility, this down on yesterday from 12.31 to 11.89. This doesn't mean to say that there's no risk around the corner. Of course there is, especially with the liquidity issue, as the market's already absorbed the positive news of a 1/4 point reduction in interest rates, and the comfort of knowing that the financial methadone is going to be coming back to the markets in November. They may want to speed up events and move the market sharply lower like they did here. You can see there the market's being moved lower. This is when Trump was telling Powell what to do, and the market's assisted by bringing prices down. No doubt Steve Mnuchin of the Treasury being instrumental in this. You can see there where we had the corrections, and this got the Fed then to start reducing rates, which is where we saw this last move come from, and prices closing back above the 200 bar in the daily chart. And then you can see this here as well, where the implied has been moving lower. But don't be fooled, as I say, if they don't get what they want, they'll throw the teddy out of the pram and make them speed it up a bit so they can get these markets up. Also keep in mind as well, if they are going to be printing from November, Santa rally this time of the year from October onwards through to December to support the bankers' bonuses as well. Okay, that will do it for this one, as struggling a bit to speak this morning. Hopefully it'll all cleared up by the end of the weekend and be back to normal. And with that, have a good weekend. As ever, thanks for watching. See you in the next one.